Manager, Verticals and Specialty at Bank of the West. We also have Tom West joining us. Tom is the principal at KPMG. And rounding us out today is Brady Berg, partner at Wilson Sonsini. So let's get started with a good conversation, as hard as that is with this topic that we're covering today. Roxanne, I think you actually proposed the title for today's event, Don't Panic. A very important statement on a good day, but especially one right now. Can you maybe share with us, though, why you were drawn to that topic and to that idea in the first place?
Yeah, thank you. Don't Panic really started with the application process. As all of you know, this was launched very quickly. And as a lender and even as a business applicant, we were all asked to do everything very quickly and with this fear that money was going to run out. And that created this panic. And I found myself telling, applicants, coworkers, don't panic. And one of the things about forgiveness is we can't run out of forgiveness, right? So this process is going to go smoother. We have more time to prepare. Lenders have more time to prepare. You have more time to prepare. And, I think it's going to be a little less anxiety driven as time moves on here. And yeah, that's where we don't need to panic anymore.
Sage advice, and I love that vote of confidence, and also just the thoughtfulness around preparation being key. We hear that time and time again. And so, Tom, maybe leaning in a little bit to your guidance and expertise here, could you share with us sort of how do we really lean into preparing in this time? How do we take advantage of this time and spaciousness to prepare well?
Yeah, I think Roxanne's comments lead right into that question, and it's a really nice segue. In terms of preparing on the front end, we were all kind of caught off guard by this new program, by the ever-changing rules. And it's not that we have great rules or a steady state when it comes to what is going to be required for forgiveness. I think one of the important takeaways we'll have at the end of this is we need to all keep paying attention and thinking about and watching the rules as they roll out. But there are a few things that I think as a best practice we can absolutely do right now to kind of get ready. The first thing that I think about, and you've probably heard this if you're looking at forgiveness and PPP loan forgiveness, is segregate your PPP funds in a separate account. That is certainly not required. And don't panic if you haven't done that and you've been operating, but it's something that you can always go back and kind of do now. By keeping those funds in a separate account, you're going to be able to track what you're spending it on, and you're going to be able to have an easier record to demonstrate when you go back to your lender and you talk about forgiveness. Maybe I've been spending too much time at home doing some homeschooling, but I keep talking to clients and saying, imagine that you're going to have to explain all of this to a relatively clever 11-year-old. And so for your own records and for your own practices, we all know money is fungible between accounts and that kind of thing. And for your own purposes, you might be fine and you might know exactly what you're spending your PPP proceeds on. But you're going to have to present this to someone else at some point. And obviously there's some great lenders out there who have been very helpful through the process, but we all know that there have been hiccups in this process as well. And ultimately this is going to have to go into the SBA and into that government system. So if you can make it easier for them by preparing now, I think that's the number one thing I would say.
Excellent, excellent. Well, obviously part of this is leaning into the idea that everything is going to be forgiven in a current state, but we know forgiveness, unfortunately, is not guaranteed. So Brady, maybe I could invite you to share for a few minutes, what are some of these risks maybe that we're seeing or coming to the surface right now for businesses to be thinking about that we may need to watch out for when it comes to things that may not qualify for forgiveness?
Yeah, and thank you for having me on this panel. I think the topic is great to not panic. There has been quite a bit of confusion, about this process. I think, as summarized, largely because the program was rushed out. Unprecedented amounts were pushed through a system. I think I heard a statistic that there was more money pushed through the 7A loan program in the first 2 weeks of the program than the prior 15 years of the program, something of that nature. So just, and to think of, and it was on a first come, first served basis. So there was a lot of panic, created from that. And then we've had some shifting guidance, where the SBA, I think, has tried to catch up with the rules and address some of the uncertainty. And I think it was also, the CARES Act was designed at a time when we didn't know how long we'd be staying at home and how long businesses would be impacted. So a lot of this we're adjusting on the fly. And this is to lead into the fact that something we haven't discussed yet, which is I think we are still expecting more guidance. We did recently get on the 15th of May here, we finally got an application and some very clear rules for how to fill out the application and how to qualify for forgiveness. So that's the good news. I think more good news, bad news is that what we're hearing is that there very good likelihood that there may be some additional changes to this program before all is said and done. So I think that's important for people to keep in mind and to just keep kind of zen about being flexible here, because just when you think you know the rules, they shift. But I think if anything now, it seems like the shifts will be to be more accommodating, perhaps extending the 8-week covered period that has been causing some angst, perhaps doing away with the 75% requirement that has been causing some angst. None of this is guaranteed yet, but what we're hearing from people in Washington who are watching this closely is that these likely will come through in fairly short order here. So keep with that in mind, I'll address kind of the current state of affairs and the current rules. So first thing is, assuming everybody now has applied for their loans, although there still is money available in the program, but those who are here, I assume have a loan and are now looking ahead to applying for forgiveness. You will fill out the application that has been published by the SBA. Again, quite detailed instructions. And you'll apply back to your lender who originated the loan, and that lender will then have 60 days from the time you apply to make a decision on forgiveness. So because the rules are potentially going to shift, we don't know how long companies will have to apply. To the extent you can wait, I would wait and try to let the rules settle out and clarify, because they'll only change probably to your benefit. You then determine a maximum amount of forgivable amount of your loan, which could be up to the full amount of the loan. And it's going to be based on your expenditures for the qualified categories that you can use the PPP loan for, which is payroll, mortgage interest, rent, and utilities. And you have to use an 8-week period after origination of the loan. It's called the covered period. The most recent rules did provide some flexibility for the payroll portion of the expenses to use an alternative 8-week period, which if you have a payroll that is biweekly or more frequent, you can start your 8-week clock with the start of the first payroll period after you receive the loan. For the other 25% of the loan, the other categories, you have to use the standard 8-week covered period. Then you are subject to potential reductions in the amount you can that would be forgivable based on whether you have terminations or layoffs compared to a prior measurement period. There's the company actually gets to pick their measurement period, either February 15, 2019 through June 30 of 2019, so call it the first half of 2019, or the first 2 months of this year. So for companies that grew significantly during the second half of 2019, you're advised to use that 2019 period, because you may actually have some headroom for terminations and still qualify for maximum forgiveness. You're also potentially going to have your forgiveness amount reduced to the extent you have wage reductions or wage cuts during the covered period for people who make less than $100,000. So be aware, and to the extent the wage cuts are more than 25% of their base, measured on an annual basis. So keep in mind the wage cuts and the terminations. And there's also an encouragement for rehiring and for reinstilling the wages, such that if you rehire back to 2000 or so February 15, 2020 levels and restore wages to that based on that same period by June 30, then any reduction in the forgiveness would be waived and you go back to full forgiveness. And I realize this is very difficult to kind of cover the nuances of these rules in this type of a format, but the point is, be aware that this is a job payroll paycheck protection program. So it's a job promotion program. So to the extent you've had necessary layoffs or wage reductions, the program understands that, but encourages you to reinstill prior levels after receiving the loan to get maximum forgiveness.
That's fantastic insights. And sorry, Tom, were you going to jump in with additions there?
Yeah, I was just going to say Brady made some really important points there. And, I was thinking back to what you asked me about preparation and what we can be doing now. And what Brady said at the beginning there is critical. We don't know all of the rules yet. We have had some better rules, a little bit more clarity with this application form, but I think we all expect some more fulsome guidance to come on what will be forgivable. And so what you should be doing, in addition to kind of tracking tracking your proceeds into a separate account, should also be really keeping track of all of your expenses right now. Contemporaneous documentation during this time period could prove critical later on if the rules change. There are the legislative proposals to push the time out, to get rid of the 75% limitation on wage forgiveness. And so keep track of everything right now, because you don't know what might be relevant later on. And I do think that the government in this space with respect to PPP loans has been, despite the back and forth, they want to be helpful here. And the SBA, I think, wants to be helpful. So to the extent you can show your work ultimately and show best efforts, contemporaneous documentation of any of this stuff, it'll be really important. Talked about payroll and hiring and furloughs and that kind of thing. So to the extent you're having communications with employees right now who have been furloughed or who have been laid off, who you're trying to rehire, there's some new provisions in the latest guidance that said, if you make a good faith effort to rehire someone, but they choose not to come back on board, then that's not going to be held against you. So making sure you have really good documentation of those kinds of things. Sometimes those only happen in conversations, so try and put it in email. Try to memorialize what you're doing right now and the impacts the kind of ongoing crisis are having on you. I think that's really key, because this has changed so many times since it rolled out. It might look very different a few weeks from now. And I know that that's frustrating, but it also is an opportunity potentially.
And hey, Tom, just to pile on, sorry, I do think it's important to again, pull up the application and read through all the instructions. It's about 10 pages long. It's pretty dense. I know a lot of times people, kind of start to fall asleep when they read through the fine print, but there is a list of records that you're required to submit with the application, which are important just to kind of start that record keeping process to get an idea of the kinds of documents you should be gathering now, making sure you have available when you apply. And then there's also a category of documents that you're not required to submit, but retain for up to 6 years after the application is, or after the loan forgiveness or the loan is repaid. So just making sure that you have all of those records handy and you've kind of categorized them accordingly. I think, there are instructions now, so just make sure you read the application all the way through, and there's a good list of documents to keep.
Oh, this is such great advice. And I guess just to amplify what we're already hearing, we know how important organization is for great business leaders and great businesses, no matter the industry, no matter the stage. And I think, being able to do this checklist, this organization, make sure you have a backup copy, I would assume too, probably all good, because it sounds like we're going to need to be referencing these documents on an ongoing basis. So great insights and advice here. You've been leaning into a lot of the key rules, obviously, already, but just to kind of throw it back to the panel one last time, are there one or two key rules right now that really stand out that we know today, understanding things may change tomorrow, that businesses really need to be focusing in on at this time?
No, in addition to what was already stated, one of the things I would just remind you is that many of your lenders are going to build some sort of user interface or portal for all of this. So, you know, I think having that application as a tool and a organization tool and a data collection tool, just keep in mind that you're not likely to have to fill out that form. You're more likely to have some sort of Q&A interface with your lender. And but that and the other thing is that a lot of those numbers aren't going to solidify for you until you're closer to that time frame where you are going to be submitting for your forgiveness, whenever that final day is.
Yeah, yeah. Really.
And I think the one other thing I would say there is that there is not a deadline of 8 weeks for forgiveness. And I think that a lot of people are forgetting that. The deadline for forgiveness is really, you have 6 months of no principal and interest payments. You have to spend your money in a certain amount of time. You have to prepare and document everything, but you don't actually have to submit. And I think it was either Brady or Tom, one of the two of you said, you know, with all the proposed changes that are happening in Congress right now, we may see some clarification, some modification to that 8-week period and the 75-25. So again, being prepared is one thing, but rushing to try to submit for forgiveness, you have time. Don't panic.
Don't panic. We're going to lean into that, Rox. I promise you. We're all going to try to remember that one. You know, obviously, one of the reasons that everybody on this call and across America realized the importance of this capital being allocated was because we're all impacted on revenues, on business at large right now. And one of the questions that continues to come to the forefront is, you know, when can we expect pre-pandemic revenue levels to start picking up again? And I know if only we had that crystal ball and you guys could accurately predict on this stage, we'd all be done. But that's not going to happen today. So we're going to actually launch a poll. We'd love to get kind of thoughtfulness against the people that are joining us today on really what they're thinking may be the timeline. So that poll is launched. Please take a moment to respond to what you think the levels are going to respond to. But while that's going on, and I'll share those results in a moment, to our panel, what words of wisdom do you have for business owners right now that are just struggling with, when does this end? When does this get better? How is your advice and guidance, with all disclosures being understood? You know, what can you share right now around that?
I'll maybe take it. We'll probably all have different perspectives. So I'm a member or partner in Wilson Sonsini's emerging companies practice. So, you know, working with a lot of startups, you know, who are reliant on you know, venture funding and obviously, you know, still are fragile businesses. And you know, I'm seeing a lot of full signs, even though it's obviously this has been a shock and people are adjusting to you know, this normal of working from home. I am seeing, you know, deals continue to get done. I'm seeing term sheets, you know, get negotiated, and so in some respects, you know, I think there will be impacts, but I think there's a lot of people looking forward to the future and getting back to business and however we can do that, right? Whatever form it looks like. So again, don't panic, you know, stay hopeful.
Yeah, it's been interesting to, you know, obviously we all have clients in a lot of different industries, and the impacts depending on the industry can be, you know, very different. Everybody is feeling it to some degree, but I'm already seeing some of the pivots people are making, some of the ideas people are having to kind of just, people have turned their businesses on a dime in remarkable ways, big and small, from, you know, corner restaurants to big manufacturing companies. And, you know, the driver of the US economy has always been innovation. And, you know, this crowd in particular, I know appreciates that. And so it's going to be hard, but it's good to see how many people do feel like we're in it together, and to see that the innovation, is already coming in. So 6 months from now, I don't know where we're going to be, but I bet a lot of people will have done some pretty creative things to kind of turn their companies.
And I would just add to that is that stay positive. I've been working my entire career, 30 years, with small, medium enterprises, and mostly in the SBA lending arena. And one thing I do know for sure about y'all is that you're resilient. Mm-hmm. And, not just creative, but resilient. And, I'm confident that your business might not look the same, but you can survive this, and because you took that chance to start your own business in the first place. And that's just being brave in a whole way that I've never been able to do. So I respect that bravery, and I know you're resilient, and I know you can succeed.
Fantastic advice. Now, on that note of advice, I've got one more prepared question, and then we've been collecting questions in the background. And actually, as people were registering, thank you so much for all of you that participated in that. We're going to go through those questions in just a minute or two. So if you do have something that is pressing, please go ahead and use that Q&A box and pop that in, and we'll get to as many as we can with the time allowed. But before we do that, one last piece of advice in 30 seconds besides don't panic, what other piece of advice might we lean into right now for these amazing business owners who are joining us today, surviving in spite of the challenges?
I would say the biggest thing is and I know, based on the attendance on this webcast and others that, that we've seen over the last few weeks, people are paying attention. Unfortunately, I know you have businesses that you're running. I know the challenges of those businesses outside of all of this stuff, but paying attention to the evolving rules here is actually going to be really important. And taking your time in terms of making decisions. We saw some of the SBA rules reverse earlier kind of decisions where, I had clients who gave back PPP loans and probably didn't ultimately need to based on where the rules landed. And so you're going to need to keep paying attention, unfortunately, until these rules come in for a landing.
Wholeheartedly agree. Sorry, Roxanne, I'll jump in, but keep paying attention. The Treasury.gov website has got a good section, highlighted for the CARES Act resources and this SBA loan program. So follow there. They post regularly. The FAQs are continually updated. There's just sort of a running list. No notice as to when new ones come. So you kind of need to check in daily, or in my case, multiple times a day to see what's been added. But that's how they dribble out the advice, and it's helpful. Just a couple of concrete things, and not to get into minutia, but these are kind of common questions I know we haven't covered. I think there is one thing to highlight, which is that they have clarified that it's not just amounts paid, but amounts also incurred during this period. So back to Roxanne's point, like you don't have to panic to apply, and then also that you don't have to worry about making sure you write a check if you've incurred costs and you wind up paying them regularly after in the normal course after the period falls. You're going to be covered. The other piece of it is people are making decisions about what to do now for their business and whether they'll be penalized in the forgiveness process for hiring and firing and wanting to rehire back. Just note, again, read these instructions very carefully, but there is a good exception for if you've terminated somebody, but you offer them a written offer to rehire them and they decline, you can treat that person as if they were hired. Likewise, you're allowed to terminate people for cause as you were before without penalty. If somebody resigns voluntarily or reduces their hours voluntarily, you're also not penalized. So, they're trying to be helpful and accommodating. And I think as they learn new problems or with the program and their guidance, they're trying to address them. They just probably can't do it fast enough for all of our taste. So stay close to the changes.
And I would say that this leads in, it's that you don't have to be perfect. And that is, and then my last piece, and this is something that as a longtime SBA lender, SBA always tells us, whatever decision you make, and if you believe that it's in, within the guidance, document, document, document. And because you'd be surprised how, often you're making the right decision. There might not be a rule that says, yes, you can make this decision, but you're making the decision within the spirit. And that is the tricky part about government loan programs, is that you have to understand sort of this, bigger context. But I would just say it's not black and white. So just document, document, document.
Okay, so we are going to go into some very specific and important questions that are top of mind for our business owners right now. So whoever wants to respond, greatly appreciated in advance. The first one came to us around the SBA application that actually came out last Friday, and the curiosity of whether or not banks are actually going to use that application. Can one of you comment on what you know or don't know around that piece right now?
Well, I'll take that. I mentioned it a little bit earlier. Many institutions, just like they did at origination, they collected the application through a portal where you logged in and you put in your information that wound up being on that PPP application document. So I would expect that you're going to see many lenders do that as well on forgiveness, especially because we have more time and there's a lot more documentation to collect.
Great, great. Rehiring, an important conversation and topic at large. And honestly, there's an awful lot of questions specific to industries within this. So one that's come up and surfaced is really affecting our poor restaurants that have been, really challenged during this time. And honestly, they're not even in a position currently today to return to pre-pandemic staffing levels. So when it comes to applying for forgiveness for that specific industry, what should these businesses do?
Should I take it? I'll take a crack at it. So I one difficult predicament, obviously, right? But the program does contemplate that the terminations may have occurred and that may have been necessary. It does again encourage rehiring by June 30, and again that date I'm hearing may get pushed out as far as the end of the year. So because we've all been impacted longer than was originally contemplated. So if we come to June 30 and we don't have advice and you're able to rehire people and getting a large amount of forgiveness of this loan is critical for you, you might consider that, but it's going to be a cost benefit, as to bringing that person back, as compared to getting forgiveness on the loan. I would say that the point of the forgiveness and the point of the Paycheck Protection Program, I think, was to turn these loans into grants in order to get money into the hands of the employees, right, to then put into the economy. So you see, you can't rehire them because of the impact of the business. This is intended to be kind of a cost-free grant to businesses that can justify it. So I think, but if you're not comfortable rehiring people, then I think the program adjusts and turns into a relatively short-term, low-interest loan that would have to be paid back.
Yeah, very fair.
Yeah, from a policy perspective, the legislative choice to do the 8-week period, I think, has proved to be very challenging for restaurants, hospitality, some of the industries who were very specifically intended to benefit from this. And that's why, the current legislation that you see coming on is, talking about extending the 8-week period to, I think it's 24 months. And as Brady said, extending that period for potentially rehiring. But on a case-by-case basis, yeah, it's been very challenging for restaurants who really cannot reopen and cannot make up, nearly with takeout and delivery. So, yeah, it's unfortunate.
Well, let's stay on the topic of employment for a second and go a little deeper into like what counts and what doesn't count, because it is all confusing, as we've already talked about. Can you maybe, one of you, walk us through on what is actually included in calculating payroll costs? Does it, for example, include things like bonuses and payroll taxes, hazard pay? Are there yeses and nos across all or none? Any insights that you can go down line by line here would be helpful.
I can give you the line by line. It's a long list. In the examples you used, so I'd say, it's salary, wages, commissions, and similar cash compensation. Bonuses is a little bit of a question mark, so I'm hoping we get some guidance on that. Although, you think a very strong argument could be made that bonuses, particularly if you could document that was part of your regular bonus cycle, it was a pattern, then I think you're probably in pretty good shape. That is cash compensation. It's still limited by the $100,000 cap on this, so you can't go too far with that. But special spot bonuses that weren't part of the pattern, that's a bit of a jump ball. Taxes, state and local taxes are included in compensation. Vacation, even severance, for people who are terminated. There are group healthcare coverage, parental family medical sick leave, except for a couple corner cases where it's not covered. So it's pretty broad interpretation of payroll taxes, or payroll costs.
That's really helpful. Now, on the other side of the equation, of course, there's ancillary benefits that we know we pay out all the time. Things like, cell phone bills and the likes. Are those counted? Are they not? Do we have guidance yet around some of those non-payroll costs that you could offer? Open to the panel.
Well, the guidance is pretty specific about what non-payroll costs you can include, right? Mortgage, interest, rent, and what's the last one?
Utilities.
Yeah.
Yes.
So your cell phone
Yep.
bills would come in there, to the extent they're corporate expenses.
Right.
I think your question, Nicola, may have been what non-cash compensation or benefits are included, and that is fairly broad and are over and above the 100K cap. So to the extent, I don't know, to be honest, if somebody's, I would think cell phone would go into the utilities bucket if the company's paying the cell phone, but but leaving that aside, other non-cash benefits are included in payroll costs.
Got it. I know we've answered this question before, but I think it's a really important one that's top of mind for a lot of employees. So maybe we just capture it again. How soon do we need to rehire employees that were furloughed during COVID-19 in order to maintain PPP eligibility? How soon do we need to do that?
Well, when you say maintain eligibility, the question is really whether or not you're kind of going to get a haircut on your forgiveness, I think. And so June 30 is the date that they established as kind of a safe harbor. If you rehire or offer to rehire people by then, or replenish salary or get people back up to their salaries to the extent they were cut by more than 25%, then June 30th is the date you're looking at.
Unless they move that out, and I'd say those are two.
Right. All things being equal until they're not. On the note, and again, we've kind of talked a little bit about this in the past. And I think the answer is going to come back to the rightful advice, document. But if an employee chooses not to accept an offer to rehire, if they choose not to come back from furlough for personal reasons, does that impact a business's forgiveness in that state? Or again, maybe taking that documentation layer one step deeper, what might a business owner try to have around them in support of showing their best efforts?
So I think you'd want to show a good for somebody who was furloughed, who didn't voluntarily resign, or asked to have their hours reduced and wasn't terminated for cause. You're going to want to have a good faith written offer. So an offer, in writing to that person that then is declined. That person would count as if they were rehired, as long as you had the good faith written offer that was declined. Unless you replace that job with somebody else, so you kind of can't double count. If that person doesn't come back, but you hire another person, then that fills the position.
Got it. Anyone else, anything to add there?
Mhm.
Perfect. This next question is a doozy, but it's a fair one. So since Congress and the SBA are still considering changes, as we've readily discussed throughout our time together today, how can we really even consider preparing for forgiveness? I know that's an unfair question, but it's one I'm going to throw to this amazing panel anyway. What are your thoughts when you hear that? And I'm sure this is not the first time that you've heard both that level of frustration, uncertainty, and just fear of wanting to do the right thing.
I think it depends on how you approach, situations like this. You can throw up your hands and do nothing and just wait and then rush at the last minute. Or you can take what information you have right now, prepare, and then if things change, it's easier to let something go than sometimes to rush around at the last minute and try to find that piece of paper. That would be that's how I would approach this.
I would wholeheartedly agree. I mean, we've, with the caveat that things have been changing and we understand why they've been changing. So be prepared for them to change mentally, so, and I would agree, don't just sort of throw up your hands then and say this is all useless, because there's a chance that these rumors that we're hearing about possible changes to the time periods or deadlines may not come through, right? It's a political process that, could fall apart for any number of reasons. So if that does fall apart, we've got some pretty clear rules right now that you can start planning against. So I would pull up the application, I'd gather your documentation, prepare to submit your application, unless you're absolutely desperate to be the first person in line to get your forgiveness application in and have it processed to get the forgiveness, then I would probably wait, to see how things are how they settle out. And it does look like if there are any changes, they should be to your benefit. So you should be happy about it. But I understand people have to plan now for kind of the worst. So I'd sort of prepare for the worst and hope for the best.
Always good advice. This one's a very tactical one, but I think an important one, just with almost a perceived perhaps conflict of interest with owners of businesses. Are owners allowed to be on payroll and owners that are normally on payroll, are they allowed to be included in payroll, and can that be offset against PPP forgiveness?
Tom, you want to take that one?
I'm sorry, I just missed the beginning of that question.
I'll take it. I'll take it. So if the owner of a business, is a W-2 employee, then yes, you can't double dip. So if it's there are some confusion about sole proprietors, right? So you couldn't kind of both get forgiveness and apply, as a sole proprietor individually and through the business. So if you're a W-2 employee, you should be covered.
One or the other.
Got it. Speaking of one or the other, I'm assuming the answer is going to be a safe yes, but never assume anything in these days. Can a business actually spend 100% of their PPP loan on payroll? We know it says a minimum of 75% of the loan needs to be spent on payroll. Is there a maximum? Is there a full amount that we have to worry about on that regard?
No, that's the answer is yes. Yeah.
Excellent. Excellent.
You even could spend 100% on utilities. You just wouldn't get any. You wouldn't get any forgiveness. Yeah.
Yeah.
You're limited by to the amount that's part of the application. So the amount you spend on payroll, you just divide that amount by 75, and that's your maximum forgiveness. 0.75 divided by 0.75.
And that limitation again was added by regulatory measure. So
correct. Yeah.
Another one of the things that may change in legislation, or that Congress may say, hey, we didn't intend that.
Yeah, I think very, very good point.
Yeah.
I have a feeling we're going to kind of expand upon that a little bit in the next question that popped up from our great group today. And again, we do have still time. If you have questions, please go ahead and put them into the chat box right now. We're going to try to get to as many as we can. And our panelists, our remarkable experts on this, are going to continue to be available in a variety of formats on their own websites, which we'll share afterwards and point you to where you can find out more on this topic. But what happens if you spend the PPP money on these non-payroll items? Can you actually just not worry about the forgiveness, kind of like you were just sharing, Brady, and pay it back like a regular loan? If so, are there actually regulations that we aren't asking for forgiveness on how we spend it? Like, do we need to worry about some of these things we talked about? Or do you still have to document how you spend it, even if it is on non-payroll items?
It can only be for those 4 categories. So you can't go spend it on, fancy cars and there's, other things. And there are already stories out about people who did that, or some YouTube blogger or something, I think, who got carried away. So, there are a lot of bad examples out there that are coming to light, unfortunately, and putting a black eye on the program. But so yeah, as long as you stick to the approved categories of expenditures, it's just that you will be limited under the current rules by the amount that will be forgiven based on the amount that's allocated to payroll. Said another way, that 75% of it under the current rules has to be on the payroll costs.
Understood.
And there's certain industries, like we've talked about, where they know they're not going to be able to bring back employees or have those kinds of payroll costs. And there's people who are proceeding, anticipating this will just be a loan for them, a 1% loan that they'll repay. And that's still a nice bridge for certain businesses.
I'll also add to that is that if you look at the note, there, as we discussed earlier, there's no principal and interest payments for 6 months. So that gives you time. The second thing is that there's no prepayment penalty. So let's say you get through all of this and you find out maybe that only 60% of your loan is your PPP loan is forgiven, and you have the cash and you want to use it, you can pay off your loan without penalty, early. That there's no harm, no foul there. As long as you spend the money on those 4, the 4 buckets that you can spend it on.
Mm-hmm.
Excellent.
They are, by the way, sorry not to pile on,
Yeah,
again, tea leaf reading, but I am seeing in some of the legislation that they're talking about expanding the categories of those 4 things, particularly to accommodate, in the restaurant industry and other businesses that need to be retrofitted, to address the pandemic, so things like, converting for takeout and, adding in, partitions to separate out, people within physical structures. So there, I think there's now a greater appreciation for the types of things that businesses will have to spend money on in order to address the pandemic. So hopefully, future rules will address those.
Excellent. How does EIDL impact PPP forgiveness, if at all, if a business owner receives both of them?
The EIDL has a forgivable component. There is a grant, a $10,000 grant component, and if you have the option of refinancing your EIDL loan in your PPP loan, and some people did that, many people did not. But if you did not refinance your EIDL loan, when you get to forgiveness, you deduct the $10,000 that was already forgiven on that. That it's like, I think there's this idea that if you've already been granted $10,000, you can't, you have to deduct that from your forgiveness.
A double dip, yeah. There's been quite a bit of confusion. I mean, the EIDL and the PPP are 2 different programs, and so some people did apply early and got an EIDL. For those that I think got the EIDL before April 3rd, you were able to then refinance it and roll it into the PPP. So it essentially becomes then the PPP loan, and it's just then the same rules apply for the PPP. If they were maintained as 2 separate loans, then they're just treated differently under each of their rules. And you can't use an EIDL for payroll and the things that you would use. You have to keep, they're really meant for operating capital, separate from the PPP program.
Helpful. That's helpful. Thank you. there was a mic drop moment earlier in the conversation around sole proprietorships and, you know, perhaps a little bit of uncertainty as to how the guidelines impacted or didn't impact them. A question from the audience is around that very statement. So guidelines aren't necessarily clear for sole proprietors with no payroll. Any clarification or insights that you can provide to sole proprietors in this forum?
You know, if you look at the certification section of that forgiveness document, there is a little bullet there that talks about sole proprietors, self-employed people, and I don't have the application in front of me, but it mentions something about your 2019 income capped at 15,000 some odd dollars, which is, I think the
that's the 8-week period. That's the 8-week pro rata of 100,000. Yeah. Right.
So if you use that, if you were a sole proprietor and when you applied, you looked at your 2019 income, net income divided by 12 times 2.5, you can do the same thing on the forgiveness side. And it looks like they're telling you, look at 2019. So you're basically taking that part as a sole proprietor or a partner in partnership and applying it on the other side. I think that that is an area that's not clear, and it's interesting that it's embedded in like a bullet point in the certifications of that application.
Yeah.
So I'm expecting to get an FAQ on that.
I would agree.
I'd like an actual regulation. It's the old treasury hand in me. I spent a lot of time writing rules when I was in the government and trying to do this. It's very, it's very frustrating for businesses out there trying to rely on forms and FAQs. And listen, I know the SBA in many cases is trying to be helpful here, but it would be really good to get, given that we, as you said several times, Roxanne, we have a little more time here. Let's get a good, robust set of rules out, and not rely on certifications in draft forms.
Here's to that. So speaking of here's to that, and good insights that you guys have already shared with us earlier around setting up a new account or prioritizing the ability to keep funds separate on PPP. Question from the audience came in around that very thing of setting up a new account, and actually their accountant in this case had already made that recommendation. But the question is, do they really need to set up a new bank account dedicated wise, or could an account within an accounting software, example, QuickBooks, those types of things, actually work for tracking and monitoring where the money goes? Any thoughts on like how granular we really need to be around that call out?
Yeah, well, as I said, I think, a best practice is a separate account, because that's going to be easy for an outsider to come in and view. But certainly if you have a general ledger and you can kind of set up something that distinguishes the ins and outs from that particular PPP account in a way that is easy to document and easy for you to document to a third party, I think that could be fine, sure.
Mm-hmm. It's not a rule, right?
Yeah, it's not a rule.
No, it's best practice, yeah.
So the topic today is don't panic. And I think panic can often be incited with fear of worst case scenarios. So this next question that came to us is really worrying about worst case scenario, and the idea that, if a loan has been forgiven, is there a possibility that the SBA can actually come in and reverse that decision after the fact? Is that a real threat that business owners need to be thinking about and trying to maintain and preserve cash if that should, God forbid, ever occur?
So I think, I'm going to leave aside clear cases of fraud and abuse, and there are examples of them, right? So I think if somebody is clearly a bad actor here, but somehow kind of skirts through the process and gets a loan forgiven, I wouldn't assume that you're scot-free at that point. So, the Department of Justice is out, looking at these. Anytime there is a massive program like this, particularly one that has pushed more money through it in 2 weeks than they did in the prior 15 years, there's going to be, X% of, fraud or kind of gross mistakes. And we were worried about this in the tea leaf reading, during this process of kind of how, because, there were a lot of reminders that these are government loans and they're subject to civil and criminal penalties. And I would say that particularly the smaller businesses, I almost found have been like the most careful and the most concerned about it, and we're being hyper conservative. And I think we're reading some of those reminders from Secretary Mnuchin and others about these penalties that were in response to some of these black eye examples that I referred to. They have recently clarified that they are going to focus their audit efforts on loans that are above $2 million. There's very small percentage of loans are in excess of that amount, but still a big number. And so that's going to, the SBA's resources are going to be focused on auditing those. And in fact, in the application, you're supposed to check whether the applicant together with their affiliates has loans in excess of that amount. So calling it attention to it and certifying it. If you're below that level, and again, you took all of these steps in good faith and you kept good records, as Roxanne said, understanding that mistakes can be made, but if you have a good faith, reasonable belief that you're taking good actions, I think you're going to be fine, right? So the pendulum does seem to have swung back, now that they're trying to be more accommodating and more they're not sending as many warning signs that reminders that people are going to be subject to criminal penalties and scaring people off, because there was a wave here where a lot of people were paying them back because of these warnings. Yeah.
Going from that heavy, weighty topic to, again, another important and very tactical one. There's no uniformity in businesses as to how they pay payroll or when they pay payroll. So question that's coming in saying, actual wages that one makes this week that are actually paid out next week, is the forgiveness based on date of wages earned, or is it based on date of wages paid? Any insights on that?
Either, but
Sure.
not.
Sure.
Yeah, we all know that one.
Tom, go ahead. Sorry.
Yeah.
I mean, you summed it up perfectly.
Yeah. There was a lot of before the application came out, there were a lot of questions about whether it would be on an as paid or as incurred basis, and they clarified that it's either, right? So it's you will get credit if it was wages incurred but not paid, or if you've paid it during the period, you'll get credit as well. You don't get both, so double dip.
But either goes. We like those kind of opportunities. That's good.
It was a good rule.
Yeah, exactly. Speaking of good rules, hopefully some of our businesses are able to find and hire new employees during this time. So question that came in, are new employees' salaries actually subject to forgiveness if we make hires during this time?
I don't see anything prohibiting that.
I believe, nothing that would prohibit it for sure. Hopefully we'll get some clarification on it. But again, the intent here is that it's a jobs program. So I think it does encourage, not only keeping the status quo, but hiring people and putting, getting people jobs and back to work.
Yeah.
On that 25% of the house that is non-wage oriented, a question that came in around rental payments for equipment that are really required and needed for the business. Are those forgivable? For example, would machinery rental agreements be included in that 25%?
I don't believe so under the current rules. That's my read, but go ahead, Tom.
Yeah, Tom.
I mean, the rules talk about mortgages on real or personal property, and there have been questions as to how broadly to read that.
Yeah.
I don't know. I think it's TBD, frankly.
So document and hope for the best right now, but not necessarily guaranteed. Okay. Another one along those lines, gas expenses for vehicles that are needed for work. Are those allowed as part of the 25%? Any insights there?
They're not specifically on the list.
Yeah.
I don't think they fit into any of the current categories.
I would agree.
This is another reason, Nicola, why we should, not rush into submitting your forgiveness application, because, the three of us can sit here and speculate that as they start rolling out FAQs and if any of this legislation moves through, this could very easily be, answered.
And these are exactly the kinds of expenses when we were talking earlier about documenting whatever you're spending money on,
Right.
even if it's not PPP money, document what you're spending money on during this period.
Yeah.
For the business.
Yeah.
Very smart. If an employer is actually forcing employees to take a day off a week for obviously all the reasons that may be present to their business right now, can the employer actually use funds received from PPP to pay those employees retroactively? Would that be allowed in the PPP program?
Pay them. So they've been furloughed for some time, or they've had reduced schedules.
Hours. Yeah, call it reduced
so,
hours, and now they're wondering, can we pick them back up? Can we pay those employees that had taken that time off without pay?
I think so.
Yeah, I mean, that's the rehire. I mean, that's
The salary
look at that as a
reduction.
salary reduction, or as you also count the FTEs based on an hourly calculation. So you have to use a 40-hour week. And so to the extent somebody isn't a 40-hour week, they probably would show up as a there wouldn't be a full FTE. And so that might impact either your FTE or your wage reduction, I think is how you would be impacted. But as long as you rehire them back to full state by June 30, you should get full credit.
Fantastic. Well, I'm conscious of time, and so I'm going to squeeze in one last question to this amazing panel, and thank you all so much for your time and insights today. The last question actually pertains to self-employment. And this comes from somebody who is obviously a self-employed business owner. How can they think about maximizing their forgiveness? They get commission weekly, and honestly, most of the costs that's being shared in this commentary is relating to mileage, which honestly wasn't happening and hasn't been happening in the last few months since we've all been sheltering in place. Is there any guidance that you can offer on a self-employed individual thinking about maximizing their forgiveness in this time?
I don't have anything specific to self-employed people beyond the four corners of what we've discussed. So yeah, unfortunately I don't. Maybe I'm misinterpreting the question.
Yeah, the question.
Well, I will echo a little bit of what the great guidance that I'm going to take away from and think about and share with businesses continually, and that is just document everything, and then let's watch and wait and see how those guidelines, hopefully rulings, come out to inform what may actually be written off. Again, I cannot thank you, Brady, Roxanne, Tom, enough for sharing your time, your wisdom, your insights, your honesty and transparency on what we know, what we don't know, and the sage advice of don't panic and slow down to speed up in all of this. Thank you. It's been a pleasure, even with the hardship of this commentary. I really appreciate how much you've given to us and to this community today. Thank you. To all of you who have joined us, thank you. Again, I know these are difficult times, and while there's a lighter tone that we try to bring to these webinars, we know how much you're facing right now. And on behalf of our communities, our nation and globe, we can't thank you enough for being there and being able to stand up for the next day that's ahead of us. Our ask in return for this gift, hopefully that you got today, is to please take a moment to share with us in the survey that you're going to see popping into the chat box in a moment, what more you need, what information you are hungry for, what programs we can be supporting you with as you continue to build the businesses that we need you to. And again, a tremendous amount of thanks to our sponsors who provide so much support for our organization and for entrepreneurs across the globe in this time. We couldn't do it without you. We're honored and humbled to be beside you. Please come join us for our upcoming events. We have remarkable ones coming up. We're humbled to have the amazing John Chambers with us next week as he shares around how to see around corners. He has quite literally been through a lot of hardships over his tenured career himself, and he's going to talk about his playbook for working through crisis and inspiring us to be the leaders that we all want to be in this time too. Again, thank you so much for all of you joining us today. We look forward to seeing you again soon. Don't panic, lean in, and be great leaders. Take care. Bye-bye.